Question 1. Which of the following best describes the primary role of the Wyoming Insurance Department? A. Oversee the issuance of insurance policies across all sectors of the insurance market. B. Regulate and enforce compliance with the Wyoming Insurance Code, ensuring the solvency of insurance companies. C. Offer insurance policies to consumers through state-sponsored plans. D. Provide advice and consultations to insurance professionals regarding state tax obligations. Answer. B. Explanation. The Wyoming Insurance Department's main role is to regulate and enforce compliance with the Wyoming Insurance Code to ensure the solvency of insurance companies, protect consumer interests, and monitor market practices. This includes overseeing the financial solvency of insurance providers and ensuring they meet regulatory requirements such as risk-based capital standards. The department also handles complaints and investigates violations of insurance laws. Option is incorrect because the department doesn't directly issue policies. Option C is incorrect because the department does not offer insurance policies to consumers. Option D is incorrect because while the department may provide guidance on regulation, its core role is not tax advisory. Question 2. Scenario-based question. Mr. Smith, an insurance producer in Wyoming, has been involved in a dispute with a client alleging fraudulent misrepresentation of terms on a life insurance policy. The client claims that Mr. Smith failed to disclose key exclusions in the policy, which led to a financial loss. What should Mr. Smith do first in accordance with Wyoming's regulations? A. Immediately notify the Wyoming Insurance Department and provide all related documentation. B. Offer to reimburse the client for the loss to settle the dispute without further action. C. Seek legal counsel before providing any response to the complaint. D. Resolve the issue privately with the client without notifying regulatory authorities. Answer A. Explanation. Under Wyoming's insurance regulations, any allegations of fraudulent activity or consumer complaints must be reported to the Wyoming Insurance Department for investigation. Insurance producers are required to cooperate with regulatory authorities to ensure that the practices within the industry remain transparent and ethical. Mr. Smith should not resolve the issue privately, as failure to notify the department could result in further regulatory consequences. Offering reimbursement, option B, is not sufficient legal resolution for fraud claim, and while seeking legal counsel, option C, is wise. The priority is to report the issue to the authorities. Option D is not an acceptable option, as all fraud-related disputes must be formally investigated. Question 3. Which of the following is true regarding the financial regulation of insurers in Wyoming? A. Insurers are required to maintain sufficient risk-based capital (RBC) levels to avoid regulatory intervention. B. Insurers are exempt from financial examinations if they maintain a history of consistent profitability. C. The Wyoming Insurance Department does not have the authority to intervene unless an insurer's liabilities exceed assets by more than 50%. D. Only life and health insurers are subject to financial solvency and reporting requirements in Wyoming. Answer A. Explanation. Option A is correct because Wyoming's insurance regulations require insurers to maintain sufficient risk-based capital (RBC) to ensure their financial solvency and avoid regulatory intervention. RBC levels are calculated based on the insurer's size, risk profile, and other factors, and inadequate RBC could trigger regulatory examination or action. Option B is incorrect because insurers are not exempt from financial examinations based on profitability alone. The department can examine any insurer regardless of financial history to ensure solvency and compliance. Option C is incorrect because the Wyoming Insurance Department has broad authority to intervene in cases of insolvency, not just when liabilities exceed assets by specific percentage. Option D is incorrect because financial solvency and reporting requirements apply to all insurers in Wyoming, including property and casualty life and health insurers. Question 4. Which of the following is a primary duty of insurance producers under Wyoming law? A. To ensure that all insurance policies are approved by the Wyoming Insurance Department before issuance. B. To maintain adequate financial reserves in case of claims as determined by the Wyoming Insurance Department. C. To disclose all material facts regarding coverage to prospective policyholders and explain the terms and exclusions. D. To handle claims payments directly with the insurer on behalf of the policyholder. Answer. C. Explanation. Under Wyoming law, insurance producers are obligated to provide accurate and complete information to clients regarding the insurance policies they are selling. This includes disclosing all material facts, terms, conditions, and exclusions that may affect a policyholder's understanding of coverage. This duty ensures that consumers make informed decisions and are not misled by omissions. Option is incorrect because insurance producers do not approve policies. This is the role of the insurer and the state's regulatory bodies. Option B is incorrect because maintaining financial reserves is the responsibility of the insurer, not the producer. Option D is incorrect because producers do not handle claims payments directly. Their role is limited to the sale and servicing of policies. Question 5. Which of the following actions would most likely result in disciplinary action by the Wyoming Insurance Department? A. A licensed insurance producer receives a monetary bonus from an insurer for meeting sales targets without disclosing this to their clients. B. An insurance company fails to offer coverage for a policyholder's pre-existing conditions in health insurance policy. C. An insurance adjuster provides advice to claimant on how to settle claim without involving the insurer. D. Consumer contacts the Wyoming Insurance Department with complaint, delaying policy issuance. Answer A. Explanation. Option is correct because insurance producers are required to disclose any potential conflicts of interest or compensation arrangements, such as receiving a bonus from an insurer for meeting sales targets. Failing to disclose such arrangements constitutes unethical conduct and could result in disciplinary action. Option B is incorrect because insurers may legally limit coverage for pre-existing conditions in health insurance policies, subject to the specific terms and conditions of the policy. Option C is incorrect because while insurance adjusters are expected to investigate claims fairly, providing advice on settlements is not inherently disciplinary unless it involves unethical practices. Option D is incorrect because receiving a complaint about a delay in policy issuance is not by itself grounds for disciplinary action. The department may investigate, but this is a routine matter. Question 6. Which of the following statements about surplus lines insurance is true under Wyoming regulations? A. Surplus lines insurance can only be purchased through licensed Wyoming insurers. B. Surplus lines insurance must be purchased from an insurer that is licensed in Wyoming. C. Surplus lines insurance is allowed when coverage cannot be obtained from a licensed insurer in Wyoming. D. Surplus lines insurance is not subject to any state regulatory oversight in Wyoming. Answer C. Explanation. Surplus lines insurance is permitted in Wyoming when coverage is unavailable from licensed insurers in the state. This allows consumers and businesses to obtain necessary insurance coverage from non-admitted insurers that are not licensed in Wyoming but are authorized to write surplus lines policies. Option is incorrect because surplus lines insurance does not require the use of licensed Wyoming insurers. Option B is incorrect because surplus lines insurance involves non-admitted insurers. Option D is incorrect because surplus lines insurance is still subject to state regulatory oversight, including the payment of surplus lines taxes and other compliance requirements. Question 7. In the case of market conduct examinations, which of the following would likely trigger an investigation by the Wyoming Insurance Department? A. A pattern of unfair or deceptive practices by an insurer in handling claims or underwriting policies. B. A single complaint from a policyholder regarding a denied claim. C. An insurer's failure to send renewal notices in timely manner. D. An insurance producer fails to complete continuing education course on time. Answer A. Explanation. Option A is correct because market conduct examinations are typically triggered by patterns of unfair or deceptive practices, such as consistent misrepresentation or failure to fulfill obligations regarding claims or underwriting. These practices can harm consumers and undermine the integrity of the market, prompting a regulatory review. Option B is incorrect because a single complaint, unless part of a broader pattern, is unlikely to trigger a market conduct examination. Option C is incorrect because failure to send renewal notices is typically a compliance issue, not necessarily a market conduct issue. Option D is incorrect because while failure to complete continuing education may result in disciplinary action against an insurance producer, it is not a market conduct issue. Question 8. Which of the following is an example of a situation in which an insurer may be subject to an enforcement action by the Wyoming Insurance Department? A. The insurer advertises policies with an endorsement that conflicts with Wyoming's approved forms. B. The insurer fails to report minor delay in the payment of claim. C. The insurer issues policy that does not include state-required endorsement even though it was approved by the policyholder. D. The insurer receives complaint regarding premium rates that are within the approved range for the type of coverage. Answer A. Explanation. Option A is correct because insurers in Wyoming are required to adhere to the approved forms and avoid advertising endorsements that are not in compliance with state regulations. This can lead to enforcement actions such as fines, orders to cease certain practices, or license suspension. Option B is incorrect because minor delays in claim payments do not automatically result in enforcement actions unless they are part of a pattern of poor claims handling. Option C is incorrect because while the omission of a state-required endorsement is a serious issue, the insurer's failure to provide policyholders' request for coverage doesn't typically lead to enforcement unless it results in broader pattern of non-compliance. Option D is incorrect because if the premium rates fall within the approved range, the insurer is compliant with regulatory guidelines. Question 9. Which of the following is a key characteristic of an insurance producer's fiduciary responsibility under Wyoming law? A. Insurance producers are required to handle clients' premiums in manner that ensures the financial stability of the insurer. B. Insurance producers must act in good faith, placing the client's interests ahead of their own when offering products or services. C. Insurance producers are responsible for guaranteeing that all claims filed by policyholders will be paid. D. Insurance producers are required to maintain financial reserves to cover policyholder. Answer B. Explanation. Option B is correct because insurance producers in Wyoming are held to a fiduciary responsibility, meaning they must act in the best interests of their clients, placing those interests ahead of their own when making recommendations or selling insurance products. This includes providing clear and honest information about coverage options and ensuring that clients understand the terms of the policies they purchase. Option is incorrect because while producers handle premiums, they do not have direct responsibility for the insurer's financial stability. Option C is incorrect because producers do not guarantee claims payments. This is the responsibility of the insurer. Option D is incorrect because maintaining financial reserves is the responsibility of the insurer, not the producer. Question 10. What is the primary purpose of risk-based capital RBC requirements for insurers in Wyoming? A. To determine the minimum amount of capital needed to cover claims on a policyholder's insurance policy. B. To ensure insurers maintain sufficient financial reserves to support their operations and policyholder obligations. C. To calculate the maximum amount of capital an insurer can hold to minimize market risk. D. To set guidelines on how much surplus capital insurers can invest in high-risk ventures. Answer B. Explanation. Option B is correct because risk-based capital (RBC) requirements are designed to ensure that insurers maintain enough financial reserves to support their ongoing operations and fulfill their obligations to policyholders. The RBC calculation considers various risk factors such as underwriting risk, credit risk, and operational risk to assess the adequacy of an insurer's capital. Option is incorrect because RBC is not specifically about covering individual policyholder claims. It is a broader measure of overall financial solvency. Option C is incorrect because RBC is about ensuring minimum capital adequacy, not maximum capital. Option D is incorrect because RBC focuses on maintaining adequate reserves, not limiting investment in high-risk ventures. Question 11. Which of the following is a requirement for a Wyoming insurance producer to maintain their license? A. The producer must pass a written exam every year. B. The producer must complete continuing education courses within a specified period. C. The producer must submit financial statements every year to the Wyoming Insurance Department. D. The producer must maintain a valid license in every state where they conduct business. Answer B. Explanation. Option B is correct because Wyoming law requires insurance producers to complete continuing education courses to maintain a license. These courses are designed to ensure that producers stay current with industry standards, regulations, and best practices. Option is incorrect because the requirement for a written exam is not annual. It is typically required for initial licensing and not on an ongoing basis. Option C is incorrect because financial statements are generally required for insurers, not individual producers. Option D is incorrect because Wyoming requires producers to be licensed in Wyoming but does not mandate licensing in other states unless they are conducting business there. Question 12. What is the primary purpose of Wyoming's Insurance Guarantee Association? A. To offer direct insurance coverage for consumers when their insurer becomes insolvent. B. To ensure that all insurers maintain competitive rates for consumers. C. To establish the terms and conditions for insurance policy forms used by all insurers. D. To provide fund for claims in case of an insurer's insolvency. Answer D. Explanation. Option D is correct because the Wyoming Insurance Guarantee Association is designed to provide a safety net for policyholders when their insurer becomes insolvent. It helps cover claims and protects policyholders from the financial burden of an insurer's failure. Option is incorrect because the association does not directly provide coverage but supports claims when an insurer is insolvent. Option B is incorrect because rate regulation is not the purpose of the association. It is the responsibility of the Wyoming Insurance Department. Option C is incorrect because the association does not establish policy form terms but focuses on ensuring that claims are paid in the event of insolvency. Question 13. Which of the following would most likely be considered an unfair trade practice in Wyoming? A. An insurer requiring a medical exam before issuing a health insurance policy. B. An insurer refusing to cover a pre-existing condition in a health insurance policy. C. An insurer advertising a discount for paying premiums annually without disclosing any exclusions. D. An insurer setting premium rates based on a policyholder's credit history. Answer C. Explanation. Option C is correct because advertising a discount without disclosing exclusions or limitations is considered an unfair trade practice. Transparency in advertising and clear communication of policy terms are essential to protect consumers. Option is incorrect because requiring a medical exam is a standard practice for underwriting health insurance policies, especially for high-risk applicants. Option B is incorrect because excluding coverage for pre-existing conditions is generally allowed depending on the terms of the policy and the type of coverage. Option D is incorrect because insurers may use credit history as a factor in determining premium rates as long as it complies with state regulations. Question 14. Mr. Williams, a consumer, has purchased an insurance policy and is concerned about the coverage of his new life insurance policy. The insurer is unwilling to clarify the terms of the policy, and Mr. Williams believes that certain exclusions were not disclosed properly. What should Mr. Williams do? A. Mr. Williams should file a complaint with the Wyoming Insurance Department. B. Mr. Williams should cancel the policy immediately and seek coverage elsewhere. C. Mr. Williams should try to resolve the issue by negotiating directly with the insurer. D. Mr. Williams should hire an attorney to review the contract before taking any further steps. Answer A. Explanation. Option A is correct because consumers have the right to file a complaint with the Wyoming Insurance Department if they believe their insurer has not fulfilled its disclosure obligations or if there are issues with the policy terms. The department can investigate and assist in resolving such disputes. Option B is incorrect because cancelling the policy might not resolve the issue and may not be in the consumer's best interest. Option C is incorrect because while direct negotiation may be an option, if the insurer is not providing proper clarification, filing a formal complaint is more appropriate. Option D is incorrect because while hiring an attorney might be helpful in certain circumstances, filing a complaint with the department is typically the first step. Question 15. Which of the following is a key provision of the Wyoming Insurance Code regarding claims handling? A. Insurers must resolve claims within 30 days of receipt, regardless of the circumstances. B. Insurers must notify policyholders of their claims decision within 10 business days of receiving all necessary documentation. C. Insurers are not required to provide written justification for denying a claim. D. Insurers must pay claims immediately upon receiving proof of loss from the policyholder. Answer B. Explanation. Option B is correct because the Wyoming Insurance Code mandates that insurers notify policyholders of their claims decision within 10 business days after receiving all necessary documentation. This ensures that policyholders are kept informed and can take appropriate action. Option is incorrect because the 30-day period is not a fixed requirement for claims resolution and can vary based on the circumstances and type of insurance. Option C is incorrect because insurers are required to provide written justification when denying a claim to ensure transparency and compliance with the law. Option D is incorrect because insurers are not required to pay claims immediately. They are required to process claims within a reasonable time frame, considering the facts of the case. Question 16. Which of the following would be considered A regulatory violation under Wyoming's market conduct rules. A. An insurer refuses to provide coverage for claim due to policyholders' non-payment of premiums. B. An insurance producer engages in the practice of rebating premiums to clients without disclosure. C. An insurer adjusts premiums based on claims history in compliance with state regulations. D. An insurer offers discounts for bundling multiple policies with the same insurer. Answer B. Explanation. Option B is correct because rebating premiums offering to return part of the premium to clients without full disclosure is considered an unfair trade practice and a regulatory violation under Wyoming's market conduct rules. Option is incorrect because denying claim due to non-payment of premiums is permissible as long as the insurer follows the proper procedure outlined in the policy. Option C is incorrect because adjusting premiums based on claims history is allowed and is common practice in many types of insurance, provided the practice is fair and transparent. Option D is incorrect because offering discounts for bundling policies is common and lawful practice as long as the terms and conditions are clear and compliant with state regulations. Question 17. Which of the following is a factor that the Wyoming Insurance Department considers when evaluating the financial solvency of an insurance company? A. The insurer's market share and its relative position in the industry. B. The insurer's claim settlement history and the speed of processing claims. C. The insurer's investment portfolio and the diversification of assets. D. The insurer's rate of growth in premium income and the number of policies sold. Answer C. Explanation. Option C is correct because the Wyoming Insurance Department evaluates the insurer's investment portfolio and asset diversification as part of the assessment of financial solvency. Strong and diversified portfolio helps ensure the insurer can meet its obligations to policyholders. Option is incorrect because market share is not directly related to financial solvency, though it can be consideration in overall business health. Option B is incorrect because while claim settlement history is important, it is not primary factor in solvency assessments. Option D is incorrect because growth in premium income and policy sales is not directly related to solvency. Financial stability is more closely linked to asset management and claims paying ability. Question 18. Which of the following is true regarding the use of credit information in determining insurance premiums in Wyoming? A. Credit history can be used by insurers to set premiums, but it must be disclosed to the consumer in writing. B. Credit history cannot be used under any circumstances to determine premiums in Wyoming. C. Only life insurance companies are allowed to use credit information when determining premiums. D. Credit scores must be used in combination with a policyholder's claim history to determine rates. Answer A. Explanation. Option A is correct because credit history is allowed to be used by insurers to set premiums, but Wyoming law requires that consumers be notified in writing about the use of credit information and be provided with the opportunity to review their credit report. Option B is incorrect because credit information can be used in Wyoming, though with specific regulatory guidelines. Option C is incorrect because credit information can be used by more than just life insurers. Other types of insurers can also use it within regulatory limits. Option D is incorrect because while claim history can affect premiums, it is not mandatory to combine it with credit scores in determining rates. Question 19. Which of the following describes an insurance adjuster's role in Wyoming? A. The adjuster settles claims on behalf of the insurer without consulting the policyholder. B. The adjuster acts as an intermediary to determine the appropriate settlement for claims and negotiate with both the insurer and the claimant. C. The adjuster decides the premium rate for the insurance policy in question. D. The adjuster is responsible for issuing insurance policies and collecting premiums from policyholders. Answer B. Explanation. Option B is correct because insurance adjusters are responsible for investigating claims, determining the validity and amount of the claim, and negotiating settlements with both the insurer and the claimant. Option is incorrect because adjusters must work collaboratively with both the insurer and the policyholder, ensuring fair handling of claims. Option C is incorrect because premium rates are determined by the insurer and are not within the adjuster's scope of responsibility. Option D is incorrect because issuing policies and collecting premiums are not duties of the adjuster. Those are responsibilities of the insurance producer. Question 20. What is the primary responsibility of the Wyoming Insurance Department in regulating insurance companies? A. To ensure that insurers adhere to the state's rate-setting guidelines and approve all premiums. B. To approve or deny the claims submitted by policyholders. C. To monitor the financial solvency of insurers and enforce compliance with financial regulations. D. To sell insurance policies directly to consumers when needed. Answer: C. Explanation. Option C is correct because the Wyoming Insurance Department's primary responsibility is to monitor the financial solvency of insurers and ensure compliance with state regulations regarding financial reporting and solvency requirements. Option is incorrect because while the department does regulate rates, it does not approve all premiums. Insurers may set rates within the guidelines provided. Option B is incorrect because approving or denying claims is the responsibility of the insurer, not the regulatory body. Option D is incorrect because the department does not sell insurance. Its role is regulatory and oversight. Question 21. Which of the following would constitute an unfair claims settlement practice in Wyoming? A. An insurer delays a claim settlement due to incomplete information from the policyholder. B. An insurer provides the policyholder with a written explanation for denying a claim. C. An insurer refuses to pay a claim because it is related to a pre-existing condition as per the policy. D. An insurer fails to conduct a reasonable investigation before denying a claim. Answer: D. Explanation. Option D is correct because failing to conduct a reasonable investigation before denying a claim is considered an unfair claims settlement practice in Wyoming. Insurers are required to thoroughly investigate claims before making a decision. Option A is incorrect because delays due to incomplete information are not considered unfair as long as the insurer is attempting to resolve the issue. Option B is incorrect because providing a written explanation for a claim denial is a proper practice and required under Wyoming law. Option C is incorrect because exclusions for pre-existing conditions are generally permissible and clearly stated in the policy. Question 22. Which of the following types of insurance would likely not be regulated by the Wyoming Insurance Department? A. Homeowners insurance. B. Health insurance. C. Surety bonds. D. Auto insurance. Answer: C. Explanation. Option C is correct because surety bonds are typically not regulated by state insurance departments like other types of insurance policies. Surety bonds are more commonly overseen by other regulatory bodies. Option is incorrect because homeowners insurance is regulated by the Wyoming Insurance Department. Option B is incorrect because health insurance is also regulated by the department. Option D is incorrect because auto insurance is regulated by the Wyoming Insurance Department. Question 23. In Wyoming, what is the required waiting period before an insurer can cancel a health insurance policy for non-payment of premiums? A. 10 days. B. 30 days. C. 60 days. D. 90 days. Answer: B. Explanation. Option B is correct because Wyoming law requires a 30-day waiting period for non-payment of premiums before a health insurance policy can be cancelled. Option is incorrect because a 10-day waiting period is generally not sufficient for cancellation due to non-payment. Option C is incorrect because the 60-day waiting period is too long for non-payment cancellations under Wyoming regulations. Option D is incorrect because a 90-day period is not required for cancellations due to non-payment. Question 24. Which of the following would require an insurance producer in Wyoming to obtain a new license? A. Changing the name of the business entity the producer works for. B. Moving the producer's office to different county within Wyoming. C. Shifting from selling only auto insurance to selling life insurance. D. Participating in continuing education courses to maintain the license. Answer: C. Explanation. Option C is correct because if a producer changes their line of business, e.g. from auto insurance to life insurance, they must obtain a new license specific to the new line of business. Option is incorrect because changing the name of the business entity does not require a new license as long as the producer's individual license remains valid. Option B is incorrect because moving the office location within Wyoming does not necessitate new license. Option D is incorrect because continuing education is required to maintain license, not to obtain new one. Question 25. If an insurance producer is found to have committed an act of fraud in Wyoming, what is the likely penalty? A. A warning issued by the Wyoming Insurance Department. B. A fine, suspension, or revocation of the producer's license. C. Temporary suspension of the producer's license until hearing is held. D. Requirement to pay restitution to the consumer affected by the fraud. Answer: B. Explanation. Option B is correct because fraud is a serious violation and typically leads to penalties such as fines, suspension, or even revocation of the producer's license in Wyoming. Option is incorrect because warning is unlikely for acts of fraud. Option C is incorrect because suspension without hearing is not the standard. The producer would generally have an opportunity for hearing. Option D is incorrect because while restitution could be ordered in some cases, the primary penalty for fraud is disciplinary action against the producer's license. Question 26. What is the maximum penalty for an insurer in Wyoming for failing to file required financial statements on time? A fine of up to $1,000 per day of delay. B. A fine of up to $25,000 per year. C. A fine of up to $10,000 for the first violation. D. A fine of up to $5,000 per day of delay. Answer D. Explanation. Option D is correct because Wyoming law can impose a fine of up to $5,000 per day for an insurer's failure to file required financial statements on time. Option is incorrect because the fine amount is lower than the correct answer. Option B is incorrect because fines are assessed per day, not annually. Option C is incorrect because the fine amount is incorrect. Question 27. Which of the following statements is true regarding the cancellation of an auto insurance policy in Wyoming? A. An insurer can cancel an auto insurance policy for any reason with no notice to the policyholder. B. A policyholder can cancel an auto insurance policy at any time with no penalty. C. An insurer can only cancel an auto insurance policy for non-payment of premiums after 60 days. D. An insurer can cancel an auto insurance policy if the policyholder moves to a different state. Answer B. Explanation. Option B is correct because a policyholder can cancel their auto insurance policy at any time without facing a penalty, though the insurer may require written notice. Option is incorrect because insurers must follow specific cancellation rules and provide notice to the policyholder. Option C is incorrect because Wyoming law requires a 30-day waiting period, not 60 days, for cancellation due to non-payment. Option D is incorrect because while insurers may allow cancellation due to relocation, it is not a mandatory reason for cancellation. Question 20. What must an insurer do in Wyoming if it refuses a claim based on policy exclusions? They notify the policyholder within 10 business days of the claim denial. B. Pay the claim and then issue a refund for the premium difference. C. Provide a written explanation of the reason for the denial. D. File a report with the Wyoming Insurance Department about the denial. Answer C. Explanation. Option C is correct because when an insurer denies a claim based on policy exclusions, it is required to provide the policyholder with a written explanation of the denial. Option is incorrect because a 10-day requirement is not applicable to exclusions specifically. Option B is incorrect because insurers are not obligated to pay claims if exclusions apply. Option D is incorrect because insurers are not required to report every claim denial to the insurance department unless there is a specific regulatory requirement. Question 29. Which of the following is considered an insurance producer in Wyoming? A. An individual who sells insurance policies on behalf of an insurer but does not receive compensation. B. An individual who sells insurance policies on behalf of an insurer and receives a commission. C. An individual who provides insurance policy claims advice but does not sell policies. D. An individual who represents an insurance company but does not offer insurance to clients. Answer B. Explanation. Option B is correct because an insurance producer is anyone who sells insurance policies and receives compensation, usually in the form of a commission. Option A is incorrect because an individual who sells insurance but does not receive compensation is not considered an insurance producer. Option C is incorrect because someone who only advises on claims and does not sell policies is not considered an insurance producer. Option D is incorrect because representing an insurance company alone does not make someone an insurance producer unless they are also selling policies. Question 30. Under Wyoming law, what is the minimum amount of continuing education C. hours required for an insurance producer to renew their license? A. 10 hours. B. 12 hours. C. 16 hours. D. 24 hours. Answer B. Explanation. Option B is correct because Wyoming requires insurance producers to complete at least 12 hours of continuing education C every 2 years in order to renew their license. Option is incorrect because the minimum requirement is 12 hours, not 10. Option C is incorrect because 16 hours is more than the required minimum for Wyoming. Option D is incorrect because the C requirement in Wyoming is 12 hours, not 24.